We decided to do that with Truflation. Why? Because we feel in any economy, the number one metric that really matters and is a scorecard for the existing administration and the governments is inflation. And ultimately, it also drives printing of money, it influences interest rates, etc., etc.
Obviously, everyone is looking for this Nostradamus indicator that can help them sort of predict the future. And can you maybe elaborate why this is the case? And is it really that strong of a signal, so to say?
I mean, you're asking the wrong person.
Am I also appealing to a sort of self-critical gene here?
Yeah, no, I mean, I obviously think we're the bee's knees, right? So we're the best thing since sliced bread. No, but I mean, realistically, we think we're about 45 days. We have a lead time to the government metrics by 45 days.
Stefan Rust, a serial entrepreneur and crypto pioneer, is the visionary founder of Truflation.
From buying his first Bitcoin in 2012 to serving as CEO of Bitcoin.com, Rust has been at the forefront of blockchain innovation, now leading the charge in providing real-time, decentralized economic data through Truflation.
So it's actually such an advantage to have trends that are more in line with Truflation that actually has an accurate reflection based on metrics like Dixie, like 10-year bonds yield, and like the price of Bitcoin.
The last thing that I want to talk about is really like Truflation's inflation outlook, like what's happening in the real world right now. So what does Truflation tell us? Where is inflation headed over the next few weeks or even months?
Down. No, it's going down, right? I mean, we see it ultimately once we get past the sort of maybe 100 days of Trump in office, potentially picking up again. And
Hey guys, welcome back to Less Noise, More Signal. Hopefully today, or I assume we will, provide a lot of signal. And for this, I have Stefan Rust with me. And Stefan is from Truflation. Very nice to have you here. Cool.
yeah, thank you for having me and looking forward to this. Thanks. Hope I can share some insights and some alpha.
Nice, exactly. Yeah. I mean, some of my listeners obviously know about Truflation and because it's been floating around on X and just some other social media for quite some time now. It's sort of this, true inflation metric, if we want to call it like this. But you can certainly share some more insights there. But maybe just to start off, who are you? How are you connected to Truflation? And then maybe, that would be a place to start.
Thank you, Pascal. Glad to be here and hope we can share some insights. I'm a serial entrepreneur. I launched multiple businesses. My first business was in the mobile space. I studied and so sold that and launched a developer agency. One of the developers wanted to get paid in Bitcoin. That drove me down the Bitcoin and the blockchain rabbit hole. Became the CEO of Bitcoin.com and then launched Truflation. I'm the founder of Truflation and the Truf Network. We had the intention when Janet Yellen and Jerome Powell told us that inflation is only transitory, and you're printing $11 trillion, the economy and an economist in me just said, that's just not possible, right? There's no way with that amount of money printing that you can only have a transitory inflation. And so we then decided to look under the hood. I had two co-founders, and we looked under the hood and we identified it's a 100-year-old methodology. It's done manually. They go back and edit data sets up to 8 months back, as well as only updating it once a month. And so, wow, bang, I can improve on this 30x. And so we then set out and tried to build a basic infrastructure in terms of how we could aggregate through API feeds a lot of these data sets to try and replicate the BLS. We did that within a 4-month time frame. We got the attention of Balaji and Chainlink right at the beginning, and that then got us off to the races. We today now have this on a fully decentralized network. So the database is mirrored across 20 different node operators. It has and goes through a verification and check so that the data is qualified. It then has a Byzantine fault-tolerant consensus algorithm to ensure, number one, the accuracy of the data being used and the calculation for the index is a reflection of the methodology. All of that is now transparent in an explorer available to anybody to verify. That is now across 100 million data points that we aggregate. And we have 3 price feeds for every point we aggregate. And we now compose those data sets into 12 categories, which then lead up into the headline CPI for the US, the UK, Argentina, and India. Each a unique, especially Argentina and India, very different challenges in terms of acquiring data according to, the way we do it in the US or even in the UK.
Yeah, very interesting. I was going to ask exactly that, it's like where does the data come from? And then also what are sort of the challenges? And maybe you already alluded to it, like you said, so you have a decentralized network of node operators. So maybe how does this exactly work? So like what sort of assurances do I get as a user in knowing that this type of data is really accurate? Can you maybe flesh this out a little bit just on a high level for maybe people who are not as technical, that they sort of understand what's going on here under the hood?
So so I talked about a consensus algorithm. What is that? I mean, it's basically trying to leverage, um, you know, um, technology and algorithms and mathematics to identify anomalies in data sets that get submitted. We have what we call sort of plugins. So all the data comes in through think of it as a funnel. That funnel then filters the data, recognizes the data, filters the data into the various categories. And we use AI for that today, thank God. So that helps us a lot. But ultimately, that then funnels the data into the respective line items and categories. And those then get composed into other data sets or indexes or categories, as we call them, on Truflation, on the Truth network, which then leads up into Truflation. But ultimately, how do we verify accuracy associated? So if we have the price of eggs at $4, somebody comes in and says $8. Wow, that's way outside of the 2 other sources that are providing them at 4 and 4.50. So 8 is 100% more expensive. Is that an accurate number? So that then goes and is blacklisted. It gets verified. If it's false, the source of that data feed is blacklisted, so we don't use that anymore. And then it's aggregated, and that happens at any time on a daily basis when the compute cycles begin to happen.
Wow. Okay. Get it. Get it. Really interesting. Like in terms of actual sources, concretely speaking, if you talk about these eggs, the prices for eggs, which I've seen it recently. The eggs, yeah, they've been doing better than Bitcoin, for example. And so the question is like, is it people from the actual real economy, like stores or consumers, or who's reporting there, like the actual source, so to say?
So at the beginning, we were slightly tied down to a limited number of sources. Today, we have what we call data aggregators. We have data partners, and we are working on consumer aggregation. It depends on the type of data sets that we have, right? I mean, eggs, generally, we aggregate from sort of data aggregators that have it from the stores themselves. So you can get it from Walmart all the way through to Whole Foods, where we actually pull it from Amazon.com's website directly, right? So we can see it because it owns Whole Foods, so we can get the Whole Foods feed. But then we work with a Nielsen, for example, as well, who then aggregate across thousands of different stores the price of eggs. So we have multiple different sources, and we've just started partnering with point of sales providers where we can now actually, when you go to a supermarket and it has a scanner, the barcode reader, we can actually capture the unique ID associated with the product and then convert what is the price associated with it that is tagged in that actual retail outlet, and then have that fed back into the Truth network.
Okay, wow. Yeah, that means so real-time data for real. Like that would be so interesting. You spoke of these challenges, in India and Argentina, and I would just be curious, like, so what type of challenges are you alluding to?
Yeah, I mean, it's more about the technical evolution in those markets. The U.S., I'd say, is pretty highly digital. They have a lot of their databases and data accessible via APIs, or even convertible into CSV files so that you can automatically read it. In India, the government data isn't as advanced as you would find the private industry data. You have a lot of mobile apps. The country lives on the mobile device, really, for any kind of digital service. So a lot of those services are actually, and data sets are provided to our network via mobile phone companies or mobile app development houses. And so that's just a different angle. In Argentina, we're actually working together. We have private sources of data feeds, but we also have government sources. So we're actually helping and working with the Argentinian government to digitize their workflows and have that available on the Truth network. So it's fully open for anybody to discover the Argentinian commercial, it's the Department of Commerce. So we're working with the Department of Commerce. And so all of their commercial data is being put on chain. And that is a pretty laborious and intensive exercise, mainly because we have to build customized adapters for each of the suppliers and each of the categories, because they all come in different formats and different time intervals. And so there's not much consistency there. And that's just, more of a challenge. And it's very manual. It's very paper driven versus digital.
Yeah, I see. No, but it's so interesting. Also, if I just start thinking about the possible future out loud here, but like it feels like then what you're telling me is that we could go into a world where sort of all these data, all of the data that is created out in the world, in supermarkets by millions of people every day, we could basically, if technology advances at some point, with AI, with other technologies, we could start aggregating them like in real time, and then sort of fed them into the network. And obviously, I feel like there's probably in a few countries, at least, there's some like data privacy issues and challenges, like if you sort of stream your data in real time to some type of network, even though probably, I guess, with our cell phones today, we already do this all the time, but just like, I feel like this could sort of evolve into this type of system if it is not already there, as far as I'm understanding, or am I correct?
100%. We're going to see real time, the gig economy is going to take over and share their pricing data in return for a specific reward. Maybe you share your data and then you should be rewarded for sharing that data. And we've been doing a lot of experiments with different type of companies. So we work with a company out of Germany called Scanit. What Scanit does is it's a scanning technology. You take a picture of the receipt, they scan the copy of the receipt, and then they have the pricing information and the product information associated with that, and they share that with the Truth network. In Canada, we work with a company, or they're a Canadian company, but they're basically global, Koi. And what Koi does is they allow their users to download a small piece of software. Beware that you download the right piece of software, because you never know what's hidden in some of these software. But if you download that, you get rewarded for sharing information. So we've done experiments around flight data. So when you're booking a flight via Expedia, Kayak, or Trivago, or any other site, that we can then actually capture the cost of flights, and we try to track the evolution of pricing data. We work with, out of Singapore, a company called Chirp. They do IoT services, and we are trying to capture noise data and flow of user data, traffic data across their networks that they've deployed. And so all sorts of different things that are maybe a bit more experimental today, but you can see in the next 2 to 3 years, they will be commoditized, they will be sort of consumerized, will be on and made available publicly for anybody to access. And that is going to be really interesting, both from an advertising perspective, from a market prediction perspective, from a forecasting perspective, or even just from looking at what is the state of affairs in a specific economy.
This show is brought to you by NewHedge. In a market driven by complexity, insight is everything. NewHedge is a dedicated Bitcoin analytics and intelligence platform delivering cutting-edge analysis, on-chain metrics, and real-time market data. With 200 plus proprietary indicators, live derivatives data, and adoption metrics, NewHedge provides the depth and precision that serious market participants demand. Backed by some of Bitcoin's most prolific investors, NewHedge connects traditional finance with Bitcoin's evolving landscape. Gain your data edge today. Sign up for free now at newhedge.io and get 50% off your advanced subscription with the code SIGNAL. Yeah, I see. Wow, just fascinating. I mean, from what I'm understanding, it's sort of like, and probably the listeners do as well, like Truflation is already quite different in terms of how it aggregates and then also sort of presents the data than the official government CPIs and inflation metrics, But maybe if we can flesh this out just on a high level again for readers, how is it really different? Like what is government doing in terms of aggregating and then depicting all these inflation metrics and sort of why is this sort of not the right approach, so to say, or why do we need to modernize inflation metrics?
Yeah, I mean, I explained really early on in the intro sort of why we went out and about and setting it up. And we just really felt that with the government berating us and telling us, don't worry, we got you covered. I just got so annoyed by that attitude that you just think we're dumb individuals out here, but we're actually smart. We can learn. We have all the tools to self-learn. And we have the technology and we know how to use the technology. So let's build a new source of truth. People are in pursuit of data, facts, and they can then begin to build their own interpretation models around that. We decided to do that with Truflation. Why? Because we feel in any economy, the number one metric that really matters and is a scorecard for the existing administration and the governments is inflation. And ultimately, it also drives printing of money. It influences interest rates, et cetera, et cetera. And so we just felt that was really ripe for innovation. And we chose over time to build a different methodology. Our methodology is fully transparent for anybody to download and anybody to read, interpret, or even if they want to, fork and build your own methodology. But either way, we have that methodology transparent. Contrast to the government, we have 100 million data points. The government has 80,000 data points. We do it daily. The government does it monthly. We have 12 subcategories under inflation. The government only has 6. We split out property tracking. Utilities is out of shelter. In the government numbers, they put utilities into shelter. Why? Utilities is a lot more volatile than the actual cost of rent or cost of a mortgage, which in the US is 30 years. And so why would you add the two together in something where utilities has a much bigger impact in terms of the price of gas drives the cost of heating, cooling. And so we felt that should be differentiated. And as a result, we've been working with universities, by the way, to actually define new types of economic models to be able to track true inflation.
Yeah, I see. Like, obviously, like as you're telling me, and that's what I'm understanding, like traditional inflation metrics, they're sort of just outdated and they should be really be modernized, because then like that's sort of the main argument, as I understand, because obviously was back in the day, I don't know if it's still a thing, but I remember when I was ruminating the libertarian circles more in depth or more regularly, there was this thing called shadow stats. You might be familiar with it for sure. Yes, and they have like all these official numbers, and I always try to look at them, also sometimes quoted them, but that what kinda made me somewhat suspicious about them as well, that they were at some point really just only saying, the inflation numbers, it's just like the real ones, the official ones, it's just deceptive, it's rigged, it's all manipulated, and there might be some truth to it, but then at the same time, this almost earned them the label sort of economic conspiracy theorists, And though my question kind of is like, I'm with them on the fact that probably the government does have some sort of interest in underrepresenting inflation numbers and just understating them. But at the same time, then I'm wondering, you're now building this. Are you ever of the belief that government inflation number will change, and they will maybe adopt some of the things that you are doing and just make it move it closer to something that you're doing, and which is maybe more a true picture of what's happening?
Sure, and I think to your point, right, the government has a huge advantage. They have some $5.5 trillion tied to the government metric, right? So in essence, all we are is a piece of noise on the side, right? I mean, to your point, we're not the signal today. But ultimately, I think a lot of people and economists alike just don't trust the government numbers anymore. They have been abusing the system for the last couple of decades. And I think the economists are tired of the old system and the abusive nature that has been applied to $5.5 trillion of loans tied to this one metric. And so we have been working with a number of different institutions, and there are and have been recommendations from those institutions to the BLS, the Bureau of Labor and Statistics, which is the government National Statistics Bureau, that on how to put a lot of the data sets online and automate it. And so I think we have an innovation window where if we can get distribution quick enough before the government understands innovation, then we have a window of opportunity. We have already proposed 3 or 4 letters to the Doge. We have everything on chain. You have a full explorer that you can track any CPI, and you can go to the granular level of identifying who the source is for the cost of eggs. And so we're just trying to be more and more transparent and see how there might be interest at the government level to actually adopt some of the technology that we have. And that's what we're doing with Argentina. We're happy to work with the government. All we care about is more data and better transparency, immutability. So we did not want to go back 6 months and be able to change the numbers. Obviously you can, but then you just need to fork the data stream and then you can go and edit it, right? And so those are angles that people can do. But it's then transparent and people can follow.
Yeah, exactly. No, but I hear you, man. I mean, if there's ever a window of opportunity, to sort of make inflation data metric more real time and stuff, it might be now, as you said, with Elon Musk and Doge, especially in the US as well. And then maybe in other countries, as you said, Argentina. I mean, they are probably way more open in general, just because their system is sort of racked, but yeah, just very interesting to see that you're sort of also trying to work with government, trying to present your metrics to the government, and hopefully see that this sort of there's some feedback coming back, at some point. I mean, I want to move away from this bird's eye perspective, and maybe move more into the micro stuff here. And because one thing I want to ask you is, you have like this, at least from what I've seen, you have like these 2 indices that you're publishing. It's the Truflation inflation index, but then you're also, when we talk about the US, you published the Bureau of Labor Statistics CPI forecasting index. And maybe for readers or listeners who are not really familiar with this, what's the difference here, and sort of what's the importance of the latter,
Yeah, I mean, that's a good point. We started off when we felt we could bully the market into just listening to Truflation. And I mean, that's the honest truth. But we realized very quickly that there was a strong demand in the financial services community. So not even in Web3, not even in Web2, but on the Wall Street, right? And in the city in London. And a lot of these bankers or hedge funds or wealth managers or family offices were interested in the BLS number. They didn't care about Truflation. But what they really liked was the fact that we can aggregate 100 million data feeds, and maybe for the US have 30 million relevant data sets, and how we would be able to recompile, slow the data sets down, and align that with that of the BLS. So we would make Truflation shitty like the BLS so that people could then compare our forecast to that of the BLS. I mean, we started off in the first year. It wasn't, I mean, we were pretty accurate, but not as accurate as we are today, where we now can actually do that to 99.96% accuracy in terms of forecastability of where and how the BLS is going to announce and what they're going to announce in terms of inflation. The challenge, though, is every month in January, the government announces how they change or have changed over the course of the year their accounting of the data sets. And they only release that in February after they've announced the January BLS or inflation number. And so, yeah, so we don't predict the first month of the year because we try to understand, we give an indication. And then afterwards, we then get heads down and have a better feel for what and the way that they're counting. And yeah, and so that's what we do. That's the difference between those two.
Yes. Okay. Nicely explained. Yeah. But then I feel like, as you said already, like the financial community might be heavily interested in that, just because like sort of it's sort of maybe then also a leading indicator for them to kind of really position themselves, and that's actually what I've been seeing a lot of people do, some of the just normal retail investors, but then obviously maybe I think some more sophisticated people as well who have been pointing, to sort of your indices, saying that there's sort of it's sort of a leading indicator. Some said it's like leading by like 3 months even. I think I've seen statistics that you have, it's up to 45 days or a little longer. So can you maybe elaborate why this is the case, and is it really that strong of a signal, so to say?
I mean, you're asking the wrong person.
Yeah, and the book is great. Am I also appealing to a sort of self-critical gene here? I know, but just like if you have some thoughts there to share, that would be amazing. Yeah.
Yeah, no, I mean, I obviously think we're the bee's knees, right? So we're the best thing since sliced bread. No, but I mean, realistically, we think we're about 45 days. We have a lead time to the government metrics by 45 days. And we've done, now that we've been around for nearly 4 years, we track way more data sets and we can predict the way the government monitors, and we get their feeds as well. We've seen that over the last 4 years, generally we see trend shifts with a 45-day lead time. So whenever there's a peak, we're generally around 45 days ahead before the government comes out and shows their peak, and then vice versa on the trough, and any of the bigger shifts throughout the course of inflation movements over the year. And remember, we just track year-on-year change that we announce publicly available on the website. We don't share month-on-month changes or anything like that. We just feel that's a bit distortionary. We've then gone back and also tried to find, a lot of our customers are bond traders, right? So they trade bonds, they trade the 10-year bond, yield bonds. Why? Interest rate really matters to those bonds, right? Because it drives the yield associated with 10-year bonds. They also trade in gold, they trade in oil, they trade in Bitcoin, all these inflationary assets. And I'd say family offices trade in Bitcoin. I wouldn't say the hedge funds that we're working with trade in Bitcoin yet, but that's just a different perspective. So we've tried to leverage over the course of the years, working alongside clients that we're working with in the TradFi world, to identify correlations across that. And we see that whenever we hit a bottom of inflation before there's an uptick, Bitcoin immediately goes up before Truflation goes up. When Truflation comes down, not only does the 10-year bond, the yield go down, but also the Dixie comes down. So the dollar against other currencies, a basket of other currencies, shift down as well. So we can see movements like that, which gives us the confidence that actually, and then all the meanwhile, you're seeing the Bureau of Labor and Statistics still go on an uptrend while everything else is coming down. And the Federal Reserve, so we work with the University of Stockholm to identify the importance of real-time inflation metrics versus traditional sort of 30-day updates, and the speed at which you can adjust interest rates at which you can impact the economy gives you such a lead time and is compounded over the course of a year. So it's actually such an advantage to have trends that are more in line with Truflation, that actually has an accurate reflection based on metrics like Dixie, like the 10-year yield, 10-year bonds yield, and like the price of Bitcoin. All of a sudden, those combined together are proving to actually show that Truflation is your source of truth for how inflation is moving.
Yeah, I see. Yeah, you can actually link it with all these different assets and then sort of see where the correlation is. And then probably, as we know, exactly, Bitcoin is sort of really prone to moving to inflation data. And obviously it's moving then maybe to the actual inflation data, which is sort of published by the official sources, by the government. But then if you sort of know in advance already where they might be headed, then obviously you can sort of position yourself. But just one last question on these 45 days that you mentioned, so this like sort of lead time and then also the lag time for the official numbers. I mean, is it really based on just historical analysis, as you said, because you're now around, I guess, 3 to 4 years, you have some data sets and you were just sort of comparing yourself to traditional inflation numbers and sort of figured out that you have this accuracy and it's about 45 days, in terms of lead lags? Or how exactly is this evaluated?
Yeah, so when we first started off, we were just tracking data. And again, coming back to our clients and customers at the time that were subscribing to the data sets, they also wanted opinions. And what we kept hearing back is, give me prediction, tell me more into the future, get further ahead. And it's like, how the hell did we do that, right? And so what we realized is cost of goods is being impacted by a number of things, from the cost of shipping, from tariffs, very minimally, but not too much. But then you have price of commodities, the weather. So all these other aspects were playing a role in the cost of goods and ultimately inflation. And so we started incorporating cost of futures. We started taking futures products, pricing of products, of raw materials, and then embedding that in certain aspects, especially around food. And in the US, food is maybe about 16 to 17% of household spending. So it's a big chunk. And people go to the grocery store 10 times a day, 10 times a month, sorry. And so if you look at that and you think about that, when you pay your salaries, it's only once a month. When you pay your mortgage, it's once a month. So you only feel the pain once a month. But if you go to the grocery store 10 times a month, every time you go, you're worrying, how can I buy that bread? How can I feed my family, right? So every time you go, you worry, which is 10 times a month. And so groceries and food category is a real important factor inside the psychological sort of aspect of inflation. And that's a lot of times how people really track inflation.
Yes, I see. Yeah, for sure. I mean, one question that springs to mind is now in all of this is sort of, how do you guys make money? That's because when you're telling me, like, if a lot of people were sort of, oh, give me prediction, I want to use your data. But as far as I know, some of the data is just like freely available on your website. So what is your business model? I would just be curious,
So in order to get some of these correlation capabilities that I was referring to earlier, you need to be a subscriber. So for $50 a month, you can subscribe to the channel. And yeah, you can get and download all the data, do your own calculations if you want to, or you can then do more and more comparisons. And we share in internal sort of newsletters to the subscribers before they go out to the public. We share certain videos. We do webinars for subscribers in advance. So that's one way. We also have, I mentioned, Wall Street in the city in London. We have a number of subscribers. That's what we call them, but they're all over the world. They're like in Dublin or in Italy or in Ohio, or we were up with anyway. So we just have different subscribers. They are more institutional and they subscribe to the enterprise category. And there it's a bit more bespoke, a bit more white glove. So Oliver and his team come up with really sort of deeper insights into specific areas as they're relevant to the narrative of that month.
I see.
That's one way. But we've got a couple of other ideas that we will be sharing with more closely in the future. But when we first started, that was the big question every time. How are you going to make money? Why? I already get a case from the government, right?
Yeah, but also from your point of view, I guess like to aggregate all this data, I believe you have to sometimes pay for this as well, right? On your side. So you have costs there as well. So you sort of have to make sure you're earning enough money to make needs end, or
Yeah, I mean, it's like any infrastructure project, right? You have to invest a bit up front to build the infrastructure, and you try to make ends meet as long as you can, and you constrain your costs. You try to be as effective as possible. And yeah, we do have costs. We have team costs, staff costs, we have data costs, we have infrastructure costs, we have development costs, engineering costs, and marketing or analysis costs as well. And so all of those sort of come together. But ultimately, yeah, we have I mean, I wouldn't say, we're profitable and highly generated, for-profit entity, but we've only been around for 3 years, and you don't get an ROI in 3 years. We also issued a token for building out the infrastructure. So we have a number of token holders that invested in the backend infrastructure and the utility token in order to access the data and reward data providers for in the native token.
Yes, I see. Interesting. Yeah, I really find it fascinating. That's why I wanted to bring you on, because like I myself, that's obviously everyone is looking for this Nostradamus indicator, that can help them sort of predict the future. And I feel like, yeah, Truflation is really at the core of this. And there's something here, that's really interesting. Obviously, there's also this say that whenever get like a sort of a signal thing gets or becomes a target, then it ceases to be a signal. So that's obviously like saying if everyone's using it, then maybe this can also sort of dampen really the accuracy of this metric. But still, it's so interesting. I mean, you have sort of also some critics for sure. Like everyone, especially if you are sort of successful. And my question would be, I don't want to go through all this criticism, but just from your point of view, what do you consider valuable criticism that points to sort of areas where you think Truflation can still and actually should improve? Anything that goes through your mind there?
Yeah, I mean, some of the criticism, I think people just haven't done their homework in terms of how we do it. They criticize our shelter. The BLS will show 36% of household spending is in shelter. We only show roughly 20%. Why? Because like I said, we've extracted insurance out of it. We've extracted utilities out of it. Those are far more volatile and succinct to outside factors than your rent is, right? And so things like that. We've also broken down shelter into shelter at home, shelter away from home, and even other lodging. So we also track hotel bills. We track Airbnb fees and stuff like that. So those are sort of criticisms that I think, look, we're transparent and we like to be and improve the metrics that we can. And anyway, and if there's constructive criticism, we're really happy to work with those individuals. And we do work with constructive individuals, and we work with our clients to get the data better. They test us much harder than the community does. And what you see in public, that's for sure. But I think each and its team have a real good grasp on this right now. And so we're pretty comfortable. We update our methodology every, I'd say, year now. We're going on to a yearly basis because I think we've battle tested it a lot more. One thing I do want to improve is on edge cases, getting more data sets. It's really hard to get data sets in the healthcare sector. It's very hard to get education, right? So private education versus public education. And then the proportion of population that go through public education is a far greater proportion. And of course, they don't pay anything, but that gets totally distorted by the cost of sort of, private universities, where you're now paying up to $100,000 a year on student loans, on other factors. How do we bake those elements into the cost post graduation, once you start earning, how do we bake that into the equation? Those are things that the team's beginning to is thinking about. And what we're trying to do is identify data sources where we can actually aggregate that from in a reliable and then scalable fashion ultimately.
Yeah, great. Cool. Very interesting. Well, I mean, the last thing that I want to talk about is really like Truflation's inflation outlook, like what's happening in the real world right now. So what does Truflation tell us? Where is inflation headed over the next few weeks or even months?
Down. Yeah, no, it's going down, right? I mean, I think we identified a huge drop at the end of February, sorry, just as we entered into March, largely because supply chains have been settling themselves. We've seen cost of food come down, transportation's come down, oil is coming down significantly. Yeah, and so as a result, and people are not spending that much, no matter, and ultimately to lure people into the stores, there are a lot more discounts. So unit prices are coming down across a broader spectrum of goods. And remember, it's again year on year. So inflation this year compared to the same time last year is a lot lower, whereby they might have increased prices last year. So the impact of an increase is not going to be visible this year, or the likelihood that they're increasing right now is not good for optics. So we're seeing it drop significantly. We see it ultimately once we get past the sort of maybe 100 days of Trump in office, potentially picking up again, and going as more money gets utilized to building out infrastructure. So the money printer will pick up in order to fix the infrastructure. We want underground tunnels to alleviate traffic in certain cities, to make transportation much faster. In China, you've got, I don't know how many railroads that do 430 kilometers an hour, whereas in the US, you have trains that go maybe 60 miles an hour top speed, right? 45 miles an hour. So ultimately, you can just see the benefit of 430 kilometers an hour versus 60 miles an hour, having far greater economic impact. And going to space, all of these exercises, AI, productivity increases, and recalibration of workforces, these new data centers, these new, TSMC building out a new fab. All of these things are going to actually stimulate the economy and possibly raise inflation a little bit. But as a result, GDP will grow. So in real terms, I don't think much will change.
Mm. Okay, I see. So you're also not of the belief as some people are when they're actually citing Truflation now, sort of, oh, prices are rising at the lowest rate in 5 years. Oh, maybe a recession is just around the corner. And so you're not one of these persons who believes, like, even though it's dropping like a rock right now, and we look at the chart, that sort of there's not going to be like an imminent recession, or
Yeah, so it doesn't look good, right? I mean, if you think about it, unemployment numbers are up. You're seeing oil prices come down, though, which is a good thing. So the drill, baby, drill is going to work, and it will reduce the cost of living. Hence, inflation's coming down. We also think that maybe interest rates will drop. I think the challenge that the new financial secretary has in the, Besant, he's got to refinance $9 trillion in 10-year bonds over the course of the next 12 months. That's a significant task. And obviously, he's not going to want to refinance those at 5% interest, right? So if he can bring the interest rates down to 3%, refinance at 3%, it's going to save a significant amount of OPEX on the P&L of the government, right? And I think that's also part of the drive right now. And productivity gains, it's going to take a while. I mean, everybody's saying AI, we're going to have all these productivity gains. I just don't see that happening in the next 1 month, 2 months, 3 months. That's going to come back at the tail end of the year. We'll start seeing how that's impacting businesses and the economy.
No, for sure.
Yeah.
Well, Stefan, thanks a lot for sharing all these insights with us. Very interesting, I thought, at least, and I think the listeners will agree. And I encourage all the listeners to see and check in Truflation themselves, how this is going to pan out in the coming days and weeks. And I just have one last question for you, that I ask to every guest. So is there sort of any other high signal person that you can recommend and that we should bring on the show to talk about Bitcoin, macro, finance, or something else that you think needs to be talked about?
Yeah, I mean, there are a lot of individuals that have a lot of insights. I mean, Raoul Pal's always somebody really high level who's got a lot of spans across a big audience. Daniel DiMartino's got a lot of insights into the U.S. market and the U.S. economy. You've got in Switzerland, actually, there's a really good guy, Alexander Ineichen, who is an economist. He's got a lot of really interesting perspectives and interpretations. Yeah, on a sort of more, say, level, I think.
Never heard about Alexander Ineichen, you said. Okay. Who is he with? Do you know?
He used to be I think with Credit Suisse or UBS, one of the banks. He was in London, and he was one of their top economists over there, going around and sort of. He has a newsletter. He's on LinkedIn, so he's got a lot of interesting posts. I like his opinions a lot. I mean, he's got a very interesting perspective, and he's very outspoken as well, which is something.
Which is nice for a banker, for sure. All the time, they're always really diplomatic at the.
He's now an independent consultant,
and that's when he can speak up and speak out. Yeah, no, interesting, cool. Definitely, will look up the name. I mean, I know some Alexander Ineichen, but maybe somebody else. But yeah, for sure. Thanks for the recommendation. Yeah, I think we're good, and thanks a lot, Stefan. And we'll link to all the things in the show notes, to your channel as well, and to Truflation, and just have a great day.
Yeah, no, thank you very much. Thank you, Pascal. Thank you for the audience for listening and taking time out. And do follow us on Twitter, Telegram, or even sign up to our newsletter. You will get insights in terms of how you can interpret Truflation to your benefit. So hope that helps. And thank you very much for having me here.
Yes, thank you. Bye, Stefan. Have a good one.